to another episode of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. Today, we'll take a look at market correlations, and we'll talk about the relationship between Canadian dollar and oil. So let's go on to the charts and we'll take a look at how these two are related and how can we trade them effectively using the market correlations. Today we'll talk about something slightly different, and that is market correlations, specifically Canadian dollar and oil. So Canadian dollar and oil are positively correlated. That means when oil moves, Canadian dollar moves in the same direction as well, because Canada is an oil producing country, and as a result of that, Canada exports oil, and the price of oil has an impact on Canadian dollar as a result of the exports that Canada does in regards to oil. So let's take a look at how we can look at this relationship and take advantage of it. So right now I'm looking at dollar CAD 1 hour chart. In this case, because we're looking at dollar CAD, we're not just looking at Canadian dollar futures, but Forex dollar CAD, we have US dollar to pay attention to as well. So the relationship gets a little bit muddied because of that, because sometimes dollar CAD will move because US dollar is strong or US dollar is weak, and it may not be directly impacted by the price of oil. But overall, when we are trading Canadian dollar, we do want to take a look at what oil is doing. Canadian dollar is positively correlated with oil. That means Canadian dollar will move in the same direction as oil. However, dollar CAD will move in the opposite direction of oil. And let's take a look at how this relationship works. So here we see that price of dollar CAD is moving down. So let's go on to our oil chart here. So I have oil right there. And the oil that I'm looking at here is the WTI oil, which is our oil that is traded in the US, not the Brent oil, although the prices close, it's not exactly the same. So I'm looking at WTI oil and not Brent oil, but either way, it will usually be very close, both the oils. We are looking at January 30th, and we see that price of oil goes up. And as price of oil goes up, Canadian dollar will go up, which means dollar CAD will actually drop. So here we see January 30, price of oil is going up. So if we go take a look at dollar CAD, this is January 30 here, we see that dollar CAD drop because Canadian dollar is going up, which is causing dollar CAD to drop. So we see a positive correlation between Canadian dollar and oil. And let's take a look at another example. So here we are on February 1st. So if we go take a look at oil, we see February 1st here, price of oil goes up. So as price of oil goes up, we should see dollar CAD drop. So let's go on to dollar CAD chart now. So we see February 1st here, as oil was going up, dollar CAD drops here. So we see dollar CAD coming down, which means Canadian dollar is getting more expensive. That's why dollar CAD is dropping. And let's take a look at another example here. So this is February the 4th. We go to our chart here. We see on February 4th here, oil drops here. This is oil. So oil drops, and now we should see dollar CAD go up on the other chart. So let's go back here, and we see that dollar CAD goes up as oil drops. So dollar CAD and oil are negatively correlated. That means if oil drops, dollar CAD will go up, and if oil goes up, dollar CAD will drop. Now, how do we take advantage of this relationship? So since we know the relationship, we can then place trades in dollar CAD based on what oil is doing. So let's say we see that oil comes into our support resistance level here, and then we get this bullish pin bar on oil. What we can then do is go take a look at dollar CAD and see if we have a similar setup in the opposite direction for dollar CAD and take that. We see pin bars here for dollar CAD. We can then take a short in dollar CAD as oil is going up. Now, do keep in mind that this will be impacted by US dollar as well. So you may want to go to the other charts and take a look at what's what's going on with other US dollar pairs as well. So we do not want to get in front of really strong or really weak dollar. But overall, though, it's a good idea to take a look at what oil is doing and trade Canadian dollar based on that. So have a view of both of those, because as we see in this example, as oil goes up, dollar CAD drops. As oil goes up again, dollar CAD drops. As oil drops here, dollar CAD will go up. So we'll go back to our chart. January 30th, we see that dollar CAD drop as oil was going up. And then on February 1st here, again, we see that dollar CAD drops as oil goes up. And on February 4th here, we see oil drops and our dollar CAD goes up. So there is that relationship. So next time you're looking at trading dollar CAD, just take a look at what oil is doing, and that can help us get into higher probability trades, or at least stay away from some of the trades that may not be the best ones to take. Thanks for joining me today. If you would like to learn how to trade using price action, I've created a special checklist for you. Click on the link below to download this free resource. And if you like this video, please feel free to share it with your friends, and make sure you subscribe so you can get other videos that I create as well. That's it for today. I'll see you next time with another new episode.